heard the economic ninja talk about the dollar whippet theory, which is very Harry Dentish, and I totally agree with the whippet theory. I got my rainbow whip for you guys today to demonstrate how this may work, and it's super rainbow, so you can't even come after me on this theory. The theory is inflation, deflation, hyperinflation. So if we're in an inflationary period of time, so it's like outward inflation, then what could happen is a stock market crash, boomer demographics, that would be a deflation, and then a digital currency and negative interest rates, that's your hyperinflation. That's where the currency is useless, and then you go into some sort of reset situation afterwards. Looks like an SDR, special drawing right, which is like worldwide currency. The Bitcoin people are like, no, it's gonna be us. It's like, you guys are gonna need to figure out privacy, because it's not like they're just gonna let this happen. I mean, I'm all pro crypto, but let's be real. It's gonna need to be some private things. So here's the idea. Right now they're in a print anything whenever mode, and like there's a $1 trillion a day on Friday went into the reverse repo market. What does that mean? I have no idea. I don't think anybody else really understands it either. It just is not good. Last time that we got to $1 trillion a day type of stuff was in September of 2019, and then there was this black swan event afterwards. It just just happened. It's just, I don't know what happened there, but it happened, and then it gave them permission to print north of $10 trillion, and they continue to print, just print. So where we're at now is like they're gonna keep printing. There's gonna be inflation. They're gonna push this idea of there being inflation. So therefore people are like, okay, yeah, we have inflation. It's gonna be mild, right? 10% here, 20% there, 500% in lumber, copper, all that type of stuff. And then what will eventually occur, and this is just a theory, but I believe that you'll have this epic bottoming of the equities. I think that the equities will crash. I think that the average baby boomer at the moment is 64 or 66, somewhere in there. I think the youngest baby boomer is 59, 60. So what's occurring is that demographic is a larger demographic than any other demographic in our Western culture. Stock markets crash. They start to downsize. They all of a sudden realize they don't have enough for retirement like they thought they did. They pull back spending, pull back spending. They're not buying new cars. They're not going to restaurants. They're not building new homes. They pull back spending. And then what occurs, that's your deflationary period. So it's inflation until a crash, in my opinion, at which point you have deflation. There's a lot of other things, not just the demographics. It doesn't have to be a crash, but I definitely think the demographics are like a big weight, like an anchor sinking us down. And then of course you've got technology, which is deflationary. And you also have like the economy has just been poked full of holes by our political elites. Like it's just unbelievable, like what's going on. Like as far as the debt levels that the average American family is taking on, that's deflationary. All this debt is deflationary. You think about it, like you spend money on a credit card, doesn't really exist. Now it exists. You buy things, right? You pay that credit card back. It's money leaving the system. It's going back to not existing. So you have inflation, you have deflation. I think you have epic deflation, and then they'll push us into a digital currency, and then they'll go negative on the interest rates. This is where you get your social credit score. This is where you have no privacy. This is where you get like loss of liberty. This is bad news. So that's the way I interpret the dollar whippet theory, which is like it's inflation, then it's deflation, then it's a hyperinflation, and then it's a currency reset all facets of society. I don't think it's gonna work, but I think that theory is very sound. I'll link to the Ninja's video on this. So the bigger question is like, okay, if that theory is even halfway correct, what do you do about it, right? Like, okay, so you're in inflationary times. Well, you can stack food. I know it sounds crazy, but it's really not. Just get some robustness, have some margin, if you will, so that if things get crazy, you don't have to worry about being inside of that crazy. You don't want to be in stores when things go crazy. Remember the great toilet paper rush of 2020. You're going to need the food anyway, so you might as well do it now. If you're worried about wealth preservation, stacking precious metals, probably your best option, possibly cryptos. They aren't super time tested, but pretty bullish on them either way. And that's pretty much all you really can do in the inflationary part. Then the deflationary bust comes. This is probably the time where if you have cash or liquid capital to deploy, this is probably the moment, and you're looking to deploy it into things that produce yields, real things, agriculture things, production things, anything like that. And then you get to the hyperinflation part, and that just screws over everybody. So the deflationary part, inflationary part is where people are taking on more debt loads because everything is inflating. And so they're like, well, you know, the dumb people are like, well, I'll just add more debt because, you know, it'll inflate away. Well, yeah, but your salary and what you're earning has to go up as well. Also, as things start to inflate, even if they're not doing that, they're getting pinched, paying more at the pump, paying more for food, they're just a little bit. So they're slowly becoming less solvent. Then there's a deflationary crash. That's where people that definitely have debt are pretty much knocked out at that point. And then there's a hyperinflation, which is where you get the rest of them. And then a few elites can definitely survive and thrive in that situation. Only thing, in my opinion, that you can do is just prepare for it. Like, you have to prepare for it, and we're probably going to have to go through this period of time. We're at that spot where freedom leads to tyranny. We're in that transition. And then to tyranny leads to revolution. And then revolution leads back to freedom. We're right at the freedom goes to tyranny part. This could be a 20-year period of history. Probably is a 20-year period of history. Hopefully it concludes less than that. But basically what we have to do is we have to go through these different phases. We're going to have to go through them taking cash out of circulation. We're going to have to go with that whole thing of them jumping over the banks. And then we're going to have to just see how this thing rolls out. But ultimately, like, having food, shelter, protection, small community, all those things are super going to matter. I know it sounds a little prepperish, and like, I don't want to like doom and gloom anyone, because I think there's a lot of opportunities that are going to be coming down the road. But we're at the end of the fiat currency system. The fiat currency has gone as far as it really can go. They're going to be able to print it. I don't know. They'll probably be able to print it another 100 trillion, but that'll come quick. It's going to be like 10 trillion, 50 trillion, 100 trillion. It's going to start coming really, really quick. And at which point they get to the digital currency part. This is where you have your universal basic income, because it's just easier to do that. You have less people producing goods and services, more currency units chasing those goods and services, and that's where you get a complete reset of society. Not before you go through really hard times. So that's the dollar whippet theory. Let me know what you think. So how do you get the hyperinflation? My assumption is, my speculation is, post-crash, that will be the time to implement the new digital currency, the Fed coin, if you will. This will be a time to jump over the banking system and change the rules of the game. So by doing this, they'll essentially be able to do a universal basic income. So I think that the catalyst is a universal basic income. That is stimmy checks based on who you are. Maybe single moms get this much, maybe students get this much, maybe we incentivize you to save some of your money and get an interest rate if you're a student. Maybe if you have more than $100,000, we disincentivize you and we need negative interest rates. And so what will occur is, I believe the only way that they'll be able to pull this economy out of a recession, and I believe that we're in a recession now, but it'll take some time for it to actually show itself, is negative interest rates. The reason I say this is, historically they've dropped the interest rates 5% to come out of a recession. Well, we're at 0%. The only way they can go is negative. If the interest rates rise, and we know that they don't want them to rise, everything falls apart. Everything falls apart if the interest rates rise. Not to normal levels like a 5, 6, 7%. Like, the interest rates rise 2.5%, 3%, 4%. Everything collapses and falls apart. I think after everything does collapse and fall apart, asset prices, etc., they jump right in and they go full pump mode. And full pump mode means universal basic income, digital currency, tax those who have excess savings, give them a negative interest rates. They could never do this with cash, because people would just go to the bank and take the cash out. You know, why would I deposit $100 if I'm going to have $95 there next year? Well, if there's no cash in society, they could do this. That's a huge speculation, but they're talking about it out in the open, and other countries are already doing it. And so will cash completely leave society? Probably not, but they'll tax you putting it in the bank, they'll tax you taking it out of the bank, they'll make it a pain in the butt, and they'll transition everyone so that they feel comfortable. I don't know how much time they'll have, because I do believe that this will cause and lead to a hyperinflation, which, playing itself fully out, will lead the states to go off on their own standards. 7 states have already had legislation implementing a gold and silver standard. I think 3 have approved it. And so the states will figure out their own currencies. That's my own speculation, is that we'll enter an area of federalism where, yeah, the federal government will exist, but the states will be like, dude, we're doing our own thing. You already see this with the marijuana laws, where it's clearly still Schedule 1 drug at the federal level, but like half of the states are already taxing it and have made it like recreational or medical. So I think that what's going to occur is that the feds will play their last hand. That's a digital currency. They'll push this digital currency. They'll do universal basic income. They'll go negative on the interest rates. People will go, well, I might as well buy things because I'm losing money. I'm losing value. And I think that this will cause a psychological rush into a hyperinflationary event. And then a hyperinflationary event destroys the currencies, destroys the debt, and it's a complete and total reset. At which point, I believe our political elites are more keen to push us into an SDR, special drawing right, which is worldwide money. I think that some states will resist this, and you'll start to see this, you'll enter this age of federalism, where maybe it doesn't go into an actual civil war, but the states just go and do their own thing. It plays itself out. The people ultimately choose private cryptos and the monetary metals, and they'll probably be digital form, so they'll probably be more like a volt chain, but ultimately people will return back to hard currency, and then we'll be able to rebuild our economy from there. You guys comment below, like these videos, and let me know what you think. I'm out. Peace.